Welcome to Invest. We talk about investing, finance, or professional development. So I've been getting this question a lot lately with respect to NIO, which is a sizable position in my account. If you follow my Patreon, you know exactly how much I'm holding and my cost average at the moment. And I've been taking a look at the technicals and obviously with respect to some of the macro affectation and the earnings call that came out recently. Obviously, with respect to the guidance from the management team is slightly missed from Wall Street expectation, but overall, in terms of Q4 2021 performance, compared to Wall Street expectation, they definitely, had a relatively good outcome on that. It's just that with respect to the outlook management team has laid out for the company, it's a little bit of optimistic slash conservative type of adjustment, driving some sell off, knowing the fact that we have technically pumped up for about 30% ever since the crash that we incurred recently. If you look at this, we were hitting all the way to $13, and then we subsequently pumped up, and now we're kind of gliding back down as we are seeing in front of us right now, about 10% as of market closing yesterday on Friday, right? So what do we see on the technical front? We are seeing some sort of a curvature downward right now with the 47 out of 70. So do we see like a major sell-off all the way back down to like, let's say $13? I would say it will be difficult, right? Because $13 was an extreme overreaction, and we ideally would need to go back to the resistance level around like the worst around like the $16, 16.20. And I think that will do it, and that will be sufficient for us to cross down on the MACD front to form a death cross, and at the same time deplete the RSI front to recuperate, to allow for a momentum coming. And I believe, with respect to Q1, right, we know that there are a lot of macro catalysts in Q1. In addition to the supply shortage that we're seeing among EV companies. Chinese companies are also having some sort of like a 1 month type of gap because of Chinese New Year or Lunar New Year, if you may, that technically will allow for people in China to be taking basically like 2 weeks off, not just on a corporate front, but on a residential front as well, which subsequently should how would you say they'll form some sort of a gap in terms of the consumer purchasing behavior, especially for vehicles. At the same time, we saw that there was a recent COVID breakout with respect to in China, right? So that can also be a hindrance. So the outlook on the management adjustments for Q1 is logical, right? Because all the affectation, combined, just basically quadruple whammy: the war cultivation between Ukraine and Russia, supply chain issues, COVID breaking out in China, Chinese New Year, and interest hikes, right? And also with respect to, despite the recent Hong Kong listing, there's still some uncertainty around the dynamic between China and Hong Kong, and with respect to US and China as well on the delisting potential. That can be a breakout. So a lot of Wild West, right? But, but for those that can see through all of these complexity, which are relatively negative, if you compare, is still going to convey a good buying opportunity if you believe in this company for long term, right? So that's the way that I would kind of play out. Again, right, the next level we need to watch out for will be somewhere around like the 16.20 or the low 15, right? And I think that's where we will need to do to continue back into the bullish momentum going forward, right? And take a look at some of the institutional buying activities in Q4. You could see that Q3, a bunch of institutional investors sold, right? But now you could see that in Q4, we have appreciated slightly upward to 1.66 billion of purchases of NIO stocks. And also with respect to the selling activities, definitely depleted a little bit more in comparisons to previously, right? And also with respect to some of the forecasts that Wall Street has for us, you can see that we are still extremely oversold in comparisons to the lowest case in terms of the spectrum, to base case, which is $46, and the upper, the bull case would be $87. And I think if I did a DCF analysis on NIO, I believe it should be trading somewhere around like the 32-ish. So technically, that's not a terrible approximation based on this setup. And with respect to analyst rating, it's 14 buys, 2 holds, but no selling signals, which I do agree with it. NIO does have strong fundamental, especially with the connection that it has with China as well. I don't believe, this company will fail, especially we are at the early inning of the EV evolutions going forward. In addition to that, I'm also seeing that with respect to, this is a platform that I subscribe to called Lucid Trading that looks at the portfolio activities in ARK Invest, which is a fund owned by Cathie Wood, obviously. And I see that basically yesterday, Cathie decided to liquidate a good sizable position from Tesla to buy NIO, and this is not a small purchase, right? She bought about 420,000 shares of NIO as a beginning of a positioning around the $1991 level. So I think that's for her to have done the research on understanding the dynamics of this company fundamentally on top of the technicals, which I already addressed. I think this is a good sign on potential reversal coming, but the technicals will have to come true, for us to deplete back to like the 16. So I do foresee Cathie to continue to be building up her NIO position as we potentially go down and then recuperate from there. But this is definitely a good sign because Cathie is a long-term fundamental investor, so is myself, which is the reason why I am investing quite heavily into NIO as well. So that's really it around NIO fundamental and technical analysis on a high level. Happy to address any further questions, go into more in-depth specificity if you would like. But have a good day. Take care. Bye.